Hello and welcome to the Strategy of the Week tutorial for September 6, 2013. My name is Steve Chappell, the Director of Educational Services here at VectorVest. The market seems to be headed into uncertain times with all the looming economic issues at play. So, in order to cope with uncertainty, we need to be more selective than ever with our stock selection practices. So tonight we plan to revisit a simple yet powerful cherry-picking technique called the Midas Touch. But our focus will once again shift to stocks. Let's jump right in the program and take a look. So here we are at the home page, and the first thing I want to point out is our color guard has been indicating over the last couple days now that it's okay to start buying stocks again. And if you've been reading the views or keeping up with the daily color guard report, we've had a cautious bias to the upside. So please keep in mind the first thing that you want to identify, particularly in times of uncertainty, is a rising market. Easy way to do that is right on your home page. You can see here at the top our market timing gauge is bullish, and we're 3 ticks into the green. We have 3 green lights all the way across the color guard. Generally speaking, it's okay to begin buying stocks for most investors when a green light is signaled in the price column of the color guard. And we've discussed on many occasions that your most opportune time is the first green light after a pullback in the market. And so this is the type of situation that we're dealing with right now. So to get you prepared for the current market, what I thought we'd do is go back and take a look at the prior upturn off the market bottom and show you how this simple yet very powerful cherry picking technique really works. So the next place I'd like to go, I'm going to take my cursor right up to the top and click on the timing tab, and from timing I'll select the market timing graph. You see, one of the beautiful things about VectorVest is we supply all this historical data, and we do so intentionally so that you have some references you can go back and look at how things have performed in similar circumstances. If we just start with our analysis working on price at the top for the last 4 months, you can see price had a nice little run here, and then we had a fairly sizable pullback all the way to this bottom, which occurred on June the 24th. A great time we mentioned moments ago to start accumulating new positions is on the first green light after this correction. The first green light occurs on June the 27th. So just 3 days up off that bottom. And you can see the market has had a nice little run since then. We're in a similar situation now, where the market has pulled back, albeit not quite as much as we saw on the prior pullback, but it has pulled back, it's bottomed, and started to work its way up again. We'll also notice it's not working its way up with quite the same force that we saw back in the late stages of June, early July. But it is moving higher nonetheless, and so it's time to be selective and pick some great stocks on a current basis. First, let me show you how you could find out that on June 27th we had our first green light after the pullback. Best resource for that information, right here on the graphs, I can simply change the markers from confirm calls to green light buyer. When I click on green light buyer, it'll place a green triangle when the first green light is issued until there's a signal change. And so the first green light was issued on June the 27th. If we move forward 1 day, you can see a yellow circle. That indicates that there was not a green light in the price column on that day. And in fact, there wasn't a green light again until July the 5th when the next triangle comes in. Now, there was a green light in the price column not only just on the 5th, but also the 8th, the 9th, the 10th, and so on, all the way up until the next yellow circle. The red triangle indicates a confirmed market down. So we've had enough of a pullback recently to get a confirmed market down signal, just as we had back here on June the 5th, heading into that market low on June the 24th. So very similar circumstances are occurring right now as occurred back here on June the 27th is all I'm trying to point out. Now certainly we're higher than then, and I understand all of that, but similar all the same. So let's see how this cherry picking technique works, and if we can pick some really great winners with something that's really simple to do. I'm going to go ahead and close this out of the market timing graph, and we're going to head over to Stock Viewer. This is a great place to begin your analysis anytime you're doing your research. So I'll simply click on Viewers. From our Viewers panel on the left, I'll choose Stock Viewer. And just as we have history for all of our market timing signals that we just witnessed, we also have all the stock data going back historically. What this will allow me to do is come right up here to the calendar. I'm going to move the calendar back to that June 27th date. It'll take us back to the close as of June 27th. Here we can see the top stocks at that time were Nexstar, Overstock, Entravision, and so on down the list. These are the stocks that have the best combination of value, safety, and timing. Remember, we sort the entire universe of stocks that we track by our indicator called VST, which combines those three elements. These are stocks that have good upside potential, typically are high in safety and have really nice timing scores, the best combinations of those three factors, and would be classified as a prudent to mildly aggressive type stock selection altogether. So a great basket to begin with. All we're going to do is simply graph the top 20 stocks. To do that, I come right up to the top, and I'm just going to choose Graph the Top 20. If yours says 10, you just dial it up to 20. Click on Graph Top 20. And in here, we're going to change the layout. Over on the right, you should have a Graph Control Panel. In the Graph Control Panel, you'll have a Graph Layout section. If I open that up, everyone should have a Midas Touch layout. When I click Midas Touch, it puts some very easy to read, very easy to interpret indicators on your chart. I'm going to push the panel off to the right, and the first thing I'm going to do is click on the 3-month button at the bottom. I'm going to take this 3-month sliding window back to that June 27th date. So we'll go all the way back, and when we get close enough, an easy little shortcut here is you can click right on the calendar at the bottom, and in this case I'll just click the 27th. Now let's have a quick refresher on the rules. Cherry picking cannot be any easier than this. This is why I love to show it. There are 3 different indicators on the graph. All we want to see is for each of these 3 indicators to be hitting a new high for this 3-month time frame. If that is the case, it is a stock that we can purchase. That's it. There's nothing else to it. I wish it were more difficult, but it's not. And so just with that information, you'd have to say here with Nexstar, it's a candidate. You have smooth, steady rising lines in all 3 factors, and they're all hitting new highs. So let's take a quick recap on what the indicators are. If I bring the control panel back out, we're looking at a 10-period moving average of our stop, STOP price, compared to a 65. And we're also looking at a 40-day moving average of our relative timing component. But again, we're not looking for crossovers. We're not looking for any of that kind of information. We're just looking to see that the indicators are in a high momentum formation. All 3 are hitting new highs over the 3-month period. Couldn't be any easier. Nexstar is one we like. It's that simple. If we go to the next one, what do you think about OSTK? Well, maybe not quite as nice as Nexstar, just from a formation standpoint, but I got to tell you, it looks pretty good. How about the next one? EVC. Well, in this case, the relative timing is beginning to peel back on us. It's not hitting that new high. When I do this analysis, I like to come up here, and where it says Dateline, I change the cursor type to crosshair. That way I can plot that crosshair and clearly see, that it's cutting back through. This is going to become really important when you'll find stocks who have a peak in the relative timing value way back here on the left edge of the graph. Let's go down to the next one, but we'll take a pass on EVC. THO looks great. DSLV, looking good. However, one thing I noticed right away is this is a velocity 3-time investment in silver, and it's an ETF short. So we'll probably go about eliminating that from our list. Remember, we're going to focus on stocks, okay? I'm going to come right back over here to the right, and we'll go down to camp. How's camp look to you? Yep, seems to be hitting new highs on all three. That's a keeper. Another velocity inverse fund on gold. So given that information, also given the fact that it's a 3-time inverse fund, and again, we're going to skip that kind of trade. Also, gold, of course, a lot of times can move into inverse to the market and adds a whole nother layer of complexity. So again, we're just purely going to stick with stocks. Go down to the next one. See, here we'll take a pass. Looks like while price is rising there a little bit, relative timing is beginning to give us some serious warnings as far as the upward ascent of price. It's really begun to slow quite a bit. So we're going to go to the next one. WDC is a keeper. DRM is a keeper. PWRD, keeper. What do you think about this one? No, not a keeper. Okay, that relative timing is beginning to peel back and indicating the upward ascent has slowed again. Let's go down. We'll take a pass. Take a pass. It's a keeper. See how easy this is? Couldn't be any easier. QIHU is a keeper. FIX, we'll take a pass. Here's where the crosshair is going to help you out quite a bit. You can see it is not making a new high. FIX is not making a new high on relative timing. And it's also probably not making a high up here. If we go down to the next one, clear and easy, we're going to take a pass. Here again, we'll need our crosshair, and we're going to say we're going to take a pass because that RT is really flattened out, and it's actually a little lower than it was just a few weeks back. We'll round things out with our 20th stock, and we are going to keep SWM. And so after all that chart analysis, if I close out of the graphs, take a moment to think about how quick we just looked through 20 stock graphs, knowing that they're good quality companies with top scores in relative value, safety, and timing combinations. How quickly did we go through and verify the price patterns of those stocks? In minutes. Once you get really good at this and don't have to take the time to explain the process, you can do it in a minute or less, really. What I want to do now is start talking about some performance. So I'm going to go through and highlight the stocks that we chose. We're going to take NXST, OSTK, THO. We're going to take a pass on those 3-time inverse funds on commodities. We're only going to stick to stocks. So I'm going to go to CAMP, WDC, DRM, PWRD, MCRI, QIHU, and SWM. Alright, once I have those selected, I'll come right up here to the top, and we can quick test the selected items. What this will do for us initially is it'll run a delta test on these stocks to see or measure the percentage price change of these stocks over time. What it does is it locks in that initial day that we have in the stock viewer of June 27th and prices the stock performance as of the close, or in this case, as of 3:52 p.m., the most recent data I have, on September 6th. Here we can see that we've got some phenomenal performance, do we not? This basket of stocks has outperformed the market big time. Now, if you're holding on to these stocks all the way through a confirmed down signal, you're getting a little greedy, typically. And so what we're going to do is back this target date off to a more realistic date, which would have been August the 16th. That was the day of a confirmed down. So if you hadn't gotten out on the RT kicker combo or some other earlier warning, heated advice that you find in the views, that type of thing, the 16th is sort of the line in the sand where enough is enough. If I click OK here, rerun the test, we still do pretty good. Better than tripling market performance with an 82.5% return on an annualized basis. That is not chopped liver. We could then march forward and take the next green light, which was on July the 5th. This was after the market bottom, okay? And I think you get the idea with the graphs already. So I'm going to skip going through the graphs on this one. But we did, or would have selected AFOP, THO, WDC. So you've got some repeat performers here. You've got multiple chances a lot of times to pick up these high momentum stocks. Q-Core, Camp, new in here with OII, PPC, and if I scroll down a bit, would have also taken Lee Enterprises. So if we do a simple quick test here, quick test the selected items, hey, look at that. More than tripled market performance again. If I go ahead and close this out, another very powerful list of stocks I want you to give some consideration to. You know, we're 2 green lights now into this next potential upturn. Very powerful list. Can be found in watch lists under special watch lists, and it's called the WOW watch list. These are watch lists of stocks being recommended by various popular newsletter writers and other publications. It's just a great list to deal with. I can tell you from personal experience. We're going to do the same analysis here. We'll just dial it back. Let's just go back to 627 just to give you a feel for that here as well. And we'll get a slightly different basket of stocks that we'll be dealing with. There will be some repeats, but slightly different altogether. If I click OK here for the 27th, we can see the top stock in this particular list is one that we favored just with top VST stocks, THO. But let's go ahead and graph these just to give you one more run through the analysis. I'm going to click on graph the top 20. And here's the trick. This is why I wanted to do it again. You got to set it to 3 months and you got to move it back. So I get it close. Click on the 27th. And I got my proper alignment set up for the analysis. So again, THO, certainly a keeper. If we go to the next one, DRM, yep, keeper. We'll take a pass. We're going to take a pass here. Notice this. I realize it's an upward trend, but we're looking for it to be at an absolute high. So we will take a pass. Keeper. 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 Whoa, here we need to take a peek. And it actually is not quite hitting a high yet here. Remember, this is one that we took on the 5th when looking at stock viewer. So it's not quite there. It's going to get there soon, but not quite yet. If we go to the next one, take a pass, take a pass, take a pass. It's so easy it gets boring. This is a keeper. You know, this one's questionable. I'll really take either answer in this case. You're going to have some of these hard decisions from time to time. But for me, relative timing is flattening out, and that's typically a sign that the upward rate of ascent has slowed enough to where, you know, stick with the true higher performers. So take a pass. Price line looks good. That's a new one. Take a pass on region. Take a pass on SLIC, although that later on will become one that you'd select. Take a pass on WLK. Take a pass. And there you go. Here's another new one. Website Pros. So if I close out of the graphs here, let's just take a look at the performance of the ones we would have chosen from the WOW watch list. We said THO, DORM, AFOP, Q-Core, STMP, ADUS, PRAA, ESRX, PCLN, and Website Pros. Come right up to the top. Click on Quick Test to Selected. What do you think? We're 10 for 10. 10 winners, not a loser in the bunch. Run all the way up to the confirmed down call. Now there's going to be some slippage, so you might come out even with an STMP trade, but over quadrupling market performance at this stage. So another great list of stocks to work with. Works equally as well on the confirmed up, if I took the time to show you that. Overall, I think you'll find that this is a very powerful methodology. You can look at just the S&P watch list, you can look at just NASDAQ stocks, you can look at any basket of stocks you like, and it's just a rather nice method and easy to implement method to use. To employ this method currently, you simply move up to the current data. Bring it all the way up to September the 6th. Now remember, always check that home page, make sure you got a green light. You know, optimum time really would have been yesterday to start, to tell you the truth, because that's the first green light after this pullback, after the bottom. You know, sometimes when you're grabbing that very first one though, like you saw perhaps earlier in the market timing graph, it can get a little dicey. Sometimes you might even want to wait for that confirmation. There's nothing wrong with waiting for the confirmed signal or a confirmed green light if that's what you want to do. In fact, it's probably a better bet and a safer play. Sometimes you might grab a green light after a confirmed down and the market continue to go down for a bit. I mean, it can happen. So you got to keep that in mind, but certainly looks like a tactic that we could employ in the market right now based upon what we're seeing currently. Remember, there's a cloudy picture ahead. So now is not the time to bet the farm on anything. But nonetheless, now is an appropriate time to start looking at the stocks today. So with that, I want to thank everybody for tuning in to this week's Strategy of the Week presentation. And we'll see you right back here again next week. Have a good weekend, everyone.